Well, Charles Taylor was founded around 1840 in the northeast of England, and its early activity was as a coal merchant. In 1885, the Standard Steamship Owners Protection and Indemnity Association engaged Charles Taylor as its manager. 110 years later, and there's a listing and a pledge to provide international and professional services to clients in the global insurance market. David Marrick is the chief executive. Now, David, steeped in history, what exactly do you offer these days? Are you still providing services to stevedores?
Absolutely, but we've now widened our services, so we provide technical services or professional services to all insurance-related clients. So it could be insurers, brokers, or the insureds themselves.
Okay, so it looks as though it's across the board because you've got three divisions: management, adjusting and run-off. The latter I haven't heard of before, but which one is the runaway success?
Well, just to be clear, the third one is insurance support services. In time it may have been run-off, but we've now broadened that out. In terms of the runaway success, in fact, all three parts of the business have been successful over the years and have expanded quite substantially. On management services, we've grown both in terms of the number of mutuals we manage, but also the size of the mutuals we manage as well. In adjusting, if you rewind back that 20 years when the listing was done, adjusting didn't exist as a business for Charles Taylor, and now it is a substantial portion of the group. And then finally, insurance support services, which has historically been the smallest part of our group, it has grown very substantially in recent years and is now a very meaningful portion of the group.
So who are your clients, or are there any household names we would have heard of?
Well, if you think of almost any large specialist insurer in the world, they're likely to be one of our clients.
On Monday, there was reports that regulation was going to get tougher for the insurance industry. Regulators, wanting to prevent another AIG insurance collapse. They are hitting some of the world's biggest insurers with safety rules that are tougher than some of the industry had expected. So will you be supporting some of your clients through these stricter measures?
Absolutely. We provide regulatory and compliance services for numerous clients who actually operate throughout the world. So as a consequence, we work very closely with them and very closely with regulators around the globe to make sure that we and our clients are compliant and meet the latest developments on the regulatory front.
So do you think this is where the biggest growth could be for your company, compliance? Because it seems as though we're being bound up in red tape these days.
Well, certainly we're there to help our clients in that area, and where we can, we do. Ultimately, our clients are there to serve the markets, to serve the insureds that have insurance needs. And what we're really there to do is to help those clients achieve that growth and support them in these times.
Now, you've been listed on the main market for quite a substantial time now, a couple of decades. It's obviously working for you, being listed. You had a rights issue in April, saw 90% acceptance. The rump of the issue was placed within about 3 hours. So what does that say about your investors?
Well, we're very appreciative of our investors. We have some very long-term investors who've been extremely supportive of the strategy that we announced about 3 years ago. They've been very encouraged by the progress we've made over that time. But I think what's also been pleasing is that as part of the rights issue, a number of new substantial investors decided to also take significant stakes in the group, and we're very pleased by that as well.
So what was the strategy that you announced 3 years ago?
So the strategy had three main parts. The first was called Reinforce the Foundations, which was all about making the group stronger at its core. The second was essentially we had some fantastic existing businesses and there was an opportunity to grow those businesses. And thirdly, we wanted to look at strategic options, ways in which to step change the business. And we've done all three over the last period.
Okay, so April, the successful placing. So what were the funds used for?
Well, over the last number of years, we've been growing very successfully, both the top line and the bottom line of the business through all the new initiatives, products and services we've launched. And we had sufficient funds to actually continue to grow the business in that way. But as part of the third part of the strategy, which was around exploring strategic options, we knew we needed funds if we were to be able to do that. So in order to make sure that we actually had the funds in place to do acquisitions, joint ventures, or make business investments, we wanted to raise the funds for that purpose, and we got the full support of our investor base for doing so.
Because that's what I was going to ask you, whether the business grows organically or, you know, through acquisition, because you've got a subsidiary, LCL Acquisitions. How busy is that subsidiary?
Sure. Well, the core has actually been growing very successfully, the core businesses. So, in fact, over the last couple of years, we've achieved over 30% growth in earnings, and in fact, the top line is now growing faster than that. So the core businesses are growing organically. In addition, we're finding opportunities to grow. Some of those opportunities are in the professional services portion of the business, but in addition, we have a owned insurance company part of the business, which is where LCL fits in, and we've actually done 4 acquisitions in the life run-off space over the last 4 years as well. And we have further plans to do more on both those fronts, on both the professional services front, but also on the owned insurance company side, particularly on the life company's side.
Okay, so you'd anticipated my question about acquisitions in the pipeline. So you also mentioned that you're very highly appreciative of your shareholders and investors. How would you describe your dividend policy?
Well, when we, for the first couple of years following joining, we actually kept the dividend flat, but as the earnings growth has now flowed through and the cash is flowing through, we've made a very clear message in the last year or so to start increasing our dividends, which we plan to continue to do so.
Okay, final question. Now, I know that you like paperwork and you made pocket money out of a personalised stationery business when you were very young, but is paperwork and storage a problem for businesses? You know, are you adopting the cloud and virtual storage? Otherwise, you know, your office will be filled with paper.
Yes. Well, over the last couple of years, we've moved increasingly towards storing all of our documents electronically. So if you came to a number of our offices a couple of years ago, you would have found the rooms full of paper, but actually now increasingly the vast proportion of what we store is electronic. And then, in fact, more recently, we're starting to look to move our storage, our electronic data storage, into the cloud. And in fact, our new group CIO, who's also leading our technology business, is working on that as we speak.
Now, I know I said that was the final question, but you've been with the group since 2011. What is the priority for the next 12 months?
Well, the focus of the group now is on continuing to grow the core businesses. We've launched quite a number of new products and services and businesses over the last couple of years. And the beauty has been is that those businesses have been successful. However, there's plenty of room for growth in those businesses as well. So we plan to focus on that. But in addition, having raised the funds as part of the rights issue, we intend to look for further opportunities to do acquisitions, joint ventures, and business investments. And we in fact announced our first one a couple of months ago in an insurance technology business, which we're very pleased about, which was in fact post the rights issue.
David Marek, Chief Executive of Charles Taylor. Thank you very much indeed for joining us today.
Thank you very much.